Good afternoon, everyone, and welcome to Liberty Bank's webinar, SBA Loans Made Easy. We appreciate everybody taking the time to listen to us today, and we hope the information that we provide will be helpful to you and your small business. And we certainly look forward to talking to you about your next opportunity for your small business. First of all, my name is Roger Self. I'm the Regional Director of Commercial Banking and Business Development in the Alabama area. And I've been in banking approximately 37 years. Most of that has been in commercial banking, and small business lending, and certainly with the SBA. One of the things I want to mention to you today is that we have a lot of information to give you in a 30-minute period and have many different participants. So we ask that please, if you have questions, if you would put those in the chat or even in an email, or if you want to email us after the fact, that'll be great. And then we'll try to respond to everybody, and so everybody can benefit from the answers to those questions. And without further ado, I'd like to introduce my colleague, Lewis Franklin, who will give you a little bit of information on himself and then get the program started. Lewis? You're on mute, Lewis.
Okay, thanks, Rob. Thank you, I appreciate it. Good afternoon, everyone. My name is Lewis Franklin. I am a commercial lender here at Liberty Bank. I have been in banking for about 15 years. The last 8 or 9 of those have been with small business and commercial lending. And we are here today, just as Roger mentioned earlier, just to give you guys some information about SBA lending and how that process works. As many of you all may know or may not know, Liberty Bank is celebrating their 50th year anniversary. And as part of that 50 years, and since that 50 years, one thing that's been near and dear to our hearts at Liberty is helping and advocating for our small businesses and working with those small businesses in the communities that we serve. So one of the things that we're always looking for is better ways to help those businesses and help our business owners, help our clients, help those businesses in the communities that we serve to gain access and better access capital. One of those things that we're looking at now, and the one thing that we're highly focused on using to do that, is the SBA. So the SBA is just an additional tool, by no means a new tool, but an additional tool that we're really focusing on to help folks get access to capital and help enhance and increase your business. So what we're hoping that you guys gain from this presentation is just some value and some insight about the SBA process, some of the programs that we work with here at Liberty, and some of the ways that you can access those programs. So I will kind of hand it off to Roger. He can give you a brief history about the SBA, and we will jump into the presentation.
Thank you, Lewis. A lot of people don't know what the SBA stands for, what their mission is for, when they started, and so forth. So I thought just a little bit of history on the SBA would be helpful here. But the SBA was started back in July of 1953 when former President Eisenhower signed an act into law that created the SBA agency. It's an agency of the federal government, and its mission is strictly to aid, either through loans, guarantees, counseling, and other services to aid small business. So there's currently 4 different areas that the SBA concentrates on. And the first is access to capital, and that's going to be one of the areas that we're focusing on today. But they also have entrepreneurial development, where they guide you and help you with different areas of your business and give you different training tools. They promote government contracting and advocacy for small businesses participating and being able to participate in those government contracts. So there's several different areas that the SBA is involved with, but I wanted to go through also the purpose of the SBA and what the function is, what the goal of the SBA is to provide for banks and for clients. The SBA programs are designed to be enhancements to the loan product. In other words, if you have maybe less than desirable collateral, or you don't have enough down payment, the SBA might be able to assist the bank in getting over that hump and being able to make you the loan. The type of collateral might not be exactly the strongest that the bank desires to have, and the SBA can enhance the loan and help the bank maybe possibly make that loan. You might not have been in business very long. It might have been a short term. You might have been in business for 2 years or a little bit less. And, banks generally like to see that you're, been in business for a while. So the SBA enhancement might allow the bank to make the loan where it ordinarily would not be able to. One of the things that we have to make sure of, and the bank has to certify this, and the client has to certify this, and that's that you cannot get the loan under similar terms at another financial institution or from another source. And the SBA is simply trying to make sure that the funds from an SBA loan go to those that actually need it. And that's the purpose of the SBA, is to make sure that the funds get to the small businesses that need it. A couple of things that you can't use the SBA for: it can't be used to offset problem credit, judgments, bankruptcies, things like that have bad credit. It can't be used for that. And it also can't be used to substitute for an ability to repay the loan. That's one of the most important things that we'll talk about and we'll mention today, is that regardless of the SBA's involvement, one of the things we have to clearly understand is the ability of you to repay the debt, the reasonable ability to repay that debt. Now we'll go back to Lewis, talking about some of the benefits to the client and the bank.
Thanks, Roger. Now, as a lot of you all are, a lot of our audience is probably familiar with a lot of the benefits of the SBA, more so now after the pandemic than before. And that's with the SBA and the PPP loan, which Liberty Bank, we participated in the PPP loan. And then a lot of you all are familiar with the EIDL loan and a lot of other SBA programs. So one of the things I did want to mention, as a lot of those programs have concluded, we want to keep that momentum of working in that partnership with the SBA going. Liberty Bank has done that by earning a designation as an express lender, making it a lot easier for us to work with the SBA, making a lot of the programs that we offer are now open to our clients and to a lot of the businesses that we serve, because we now hold that designation. So those are programs that Roger will dive into a little bit later in the presentation. But I know that a lot of folks know through the PPP and the other programs that there was a clear benefit to them in their business. So a lot of the programs, or a lot of folks want to know, with the SBA loans, traditional SBA loans, what are the benefits? Why would we be looking at that? So I want to make sure I hit a couple of highlights Roger hit earlier, but one of the primary benefits with the SBA loan is that it gives you access to financing that you might not be able to get otherwise. So banks have traditional standards, traditional credit underwriting guidelines, and sometimes those can be a little strict. And that's where the SBA credit enhancement comes in. So the SBA might allow a borrower to get access to credit or get access to capital where they might not otherwise qualify. So it might give them a more extended term, which makes the loan cash flow where it would not have before. Sometimes that looks like a lower down payment, which means that the borrower will make less of an equity injection into the loan, but the SBA guarantee will offset that. It also looks like maybe we don't have favorable collateral. A lot of times we want to see that a loan is well secured, well collateralized. We have good underlying collateral. Sometimes that may fall short. If you are familiar with the terms, loan to value, you've heard those before if you've been working with bankers. Sometimes we need a certain number there, and that might not be there. So working with the SBA, we're allowed to offset some of that. So the SBA offers some great products and some great ways to offset or mitigate a lot of those things that might not make you a desirable candidate for a traditional small business loan. That's where the SBA steps in. So, and for the bank, and because I know a lot of folks say, well, if I'm doing the SBA loan, why would the bank give me an SBA loan? What's the benefit to them? The SBA guarantee, or the federal guarantee we get from the SBA, just further enhances that loan. It just makes that loan look better for the bank, because now we have an SBA guarantee from the federal government, which makes your loan a little bit stronger. So if you're interested, or you find yourself interested in an SBA loan, or you're interested in anything that we're talking about, or you're thinking maybe my small business could benefit from an SBA loan, what can I use it for? So we know that working in commercial lending as long as we have, we've seen so many different loans. There's no one standard loan. There's no one loan that fits the box. And everybody has a different use for what they may want to use their loan for. So the SBA has a list of what you can use the loan for and what are eligible uses for the loan. So I'll run through a few of those that we see quite often. So that would be new construction, renovation, leasehold improvements, business acquisition is a big one. The SBA is an excellent tool for acquiring an existing business. The SBA does work with, and I think Roger mentioned this earlier, with younger businesses or startup businesses. Those would be businesses that are less than 2 years old. However, if we do work with those businesses, we do like to see that there is additional income or outside income that's coming in. It's very difficult for, even with the SBA, for us to work with a business that is in like a pre-revenue. They haven't really started yet, or they're less than 2 years old. There are some SBA lenders out there that work with those types of businesses. But however, they participate in different programs than we do. So those are businesses that are usually less than 2 years old. But if you have any questions about that, reach out to us. We can point you in the right direction. A big one that we see that people benefit from the SBA is with refinancing or consolidating existing business debt. So the SBA is a great way to consolidate or refinance maybe some term debt that you have on an owner-occupied building. It's a great way just to get better terms and to utilize the programs that we have. So those are some of the uses that you can, some of the ways you can use the proceeds from the SBA. You do have to qualify. You do have to be an eligible business. So I will let Roger jump into some of the eligibility requirements for the SBA and what they look for.
Thank you, Louis. The eligibility requirements, and this is it's not intended to be all inclusive, but it'll give you a general idea of what it takes to be eligible to participate in an SBA program. It has to be a for-profit business. It has to be for-profit doing business in the United States. If you remember, during the PPP program, they did allow nonprofit organizations to get PPP loans. That was just a special case. On the regular SBA programs, they don't currently allow nonprofits to be involved. There's certain size specifications that you have to meet to be determined to be a small business. For instance, and we would counsel with you on this when we're talking through the loan process and help you make that determination. But for instance, in retail, they might require you to have 100 or less employees. Manufacturing, it might be 500 or less employees, and depending on the program, they may base it on your average revenue that you've had for the last 2 years. And I think the maximum that they allow on that is $5 million for the last 2 years, $5 million net profit. So, or $15 million net equity in your company. So that's, pretty reasonable in most cases, but you need to remember that does include any affiliated businesses. People forget that sometimes, but if you've got 4 or 5 affiliated businesses and they've got 100 employees each or so forth, that could trip you up. But we'll help you in that respect. But after you get through the size limitations, then there's other things that have to be there in order to qualify. You got to exhibit good character and credit. That goes without saying. You have to have management ability and experience in that particular industry, and that's really big. Sometimes when you're trying to qualify for a loan and showing the SBA that you have either experience in that industry or comparable management or business management experience, so they and the bank can feel comfortable that you know how to successfully operate that business. But above all, many of the things that we're going to mention tonight are very important, but above all, you have to be able to show that you can service the debt. If we don't have a clear understanding, a reasonable understanding as to where that repayment source can come from, then it's something that will not qualify for the bank loan or the SBA portion. The next thing I'd like to get into, we've mentioned this throughout our presentation so far, but there's a couple of common programs that we have, common types of SBA loan programs that we participate in. You'll hear people talk about the 7A loan, and then you'll hear them talk about the 504. And we're going to talk about both of those tonight. And I wanted to mention, first of all, the 7A. Excuse me, most people think that most people talk about the 7A loan, and that usually is called the guarantee program, meaning that in order to entice the bank to make a loan, the SBA will provide a percentage guarantee from the federal government of that particular loan. We're talking about 7A loans. It's called a guarantee loan program. And those guarantees range anywhere from 50 to 85%, just depending on the type and the size loan that you have. So it could be very lucrative to both you and the bank, because that helps us get through some of the risks that are normally involved with lending. The maximum potential loan amounts for a regular 7A loan, that would be $5 million. If it was an SBA Express that you'll hear us talk about a little bit, SBA Express program, maximum will be $500,000. And then a small loan, SBA small loan, would be $350,000. You know, the types of loans can be lines of credit or term loans for all the different purposes that and reasons that Lewis mentioned previously. Rates are typically floating on an SBA 7A loan. There can be some fixed rate scenarios, but generally those are pretty high. But typically they're floating rates on this type of product. There's fees associated with the SBA loans. Those fees can be financed into the loan proceeds. If it's $350,000 or less, you'll have closing costs on any of these loans, but the SBA fees are actually zero on $350,000 or less right now. So that's a good thing. But again, it's nothing to worry about, because you can finance those fees on the larger loans. You can finance them in with the loan amount. Maturities are another thing that we wanted to mention, and that's one of the reasons people qualify for an SBA loan, because you can get extended terms sometimes, whereas you might not be able to get that on a conventional loan. The maximum maturities, for example, on a real estate loan would be up to 25 years. And again, that's the maximum. It has to be approved by the bank and through the process and so forth. But if you need that extra little bit of time on your real estate loan, sometimes that helps on your cash flow. And there's no balloon, no demand feature on the 7A loans, meaning that if you get your loan, it's for a 25-year real estate loan, it matures in 25 years. The maximum maturity for working capital is up to 10 years. And most equipment is also a 10-year maturity. But if you have circumstances where you have heavy manufacturing equipment, and the IRS says that particular piece of equipment has a longer useful life, then you might can get a little bit longer, up to 15 years. But anyway, that depends on the IRS rules. The 504 is a different program. And I want to go over that next. We were talking about the SBA 7A, and there's several different products up under that 7A guaranteed line of products. But the 504 is a little bit different. The lender actually makes the loan and approves the loan, and in conjunction with the SBA. And what happens is that the lender will actually have a 50% first mortgage on the assets. The SBA will have a 30 to 40% second mortgage on assets. And then depending on the product and depending on the situation, the client will have to put in 10 to 20% equity. It just depends on the product, whether it's a brand new company, if it's special purpose collateral, things like that would dictate, the risk of the loan, things like that would dictate the amount of equity that would have to go into the product. The terms are 10, 20, 25 years. The advantages of being able to utilize that was sometimes you can get a lower rate, a long-term fixed rate on the SBA portion. The bank portion would be a floating or a fixed rate, and the minimum balloon period would be 10 years. But typically we would try to have the same type of amortization that the SBA piece has. Now, we would work in conjunction on a 504 loan in conjunction with a community development company, which actually is the packaging agent for the SBA. So it's almost like you'd be running parallel with the what we call a CDC and with the bank. But it's a very good loan product. We've done many of those, and it's just one more product that would give you an avenue to go for your business. But one other thing I did want to mention before we left the product area is that I failed to mention a couple of things up under the 7A guarantee program. Lewis mentioned we are an express lender, and that gives us an opportunity to do some lending of use different products that we ordinarily wouldn't be able to do. One of them is the SBA Express line of credit. And we see that a lot in SBA lending. It gives the best of both worlds. It gives you the opportunity to borrow money for a line of credit. And then at the end of that, or maturity of that line of credit, then it automatically converts to a term loan. So that's advantageous to you because it gives you a longer period of time to repay that debt. Has a little revolving part of it as well as a term part of it, and it makes the bank feel better because we know at the end of that revolving period, then that debt, whatever's remaining on that line of credit, will be termed out. So I did want to mention that. There are some other products, SBA Advantage, Veterans Advantage. That's basically the same as the SBA Express, the same $500,000 limit, but in all cases, under the SBA piece, the SBA fees are zero for veterans. There are different products for import and exports, lines of credit. We don't participate in that one as much right now, but we are investigating the different SBA products that we possibly can bring on board at a later date. There are cap lines of credit. We have done some cap lines in the past, but I can tell you those are different types of those are true working capital lines of credit that you have to provide documentation, accounts receivable agings, borrowing base reports, and so forth. It's a lot more hands-on than, say, the SBA Express lines of credit. Lewis will now go over the application process itself. That's one of the questions that we get all the time is what is the process? So Lewis, you want to go through that?
Yeah, thanks, Roger. I appreciate that. Now, if you guys were listening to Roger, he was going over a lot of the details around a lot of the products that the SBA does offer. The good thing to know there is that there is only one application process for all of those products. And what we ask is when you come to us, when you're looking to apply or you think you might qualify for an SBA loan, because our job is to make sure that we put you in the right fit, the right vehicle, and line you up with the right SBA product that's going to benefit you and your business. So what I'm going to talk about really briefly is a lot of you have heard, and I'm sure that there's some horror stories out there about the SBA process and some stigma around it taking quite a long time to get it done. So what we've done is we've really worked to streamline our SBA process. working with our internal processes, working with a experienced SBA packager to help us push our loans through. So timeliness is not going to be an issue for us. But the application process is very important because essentially this process is us working with you, but we want our borrowers to be prepared when they bring their applications forward, or they get ready to bring their application forward. So one thing I would emphasize, and one thing I would encourage everyone to do, is if you're looking at applying for an SBA loan, please have a good understanding of what your purpose is, what are you going to be using those proceeds for, and why are you thinking you're needing that loan, because that's just going to give us a lot more insight and a lot more ammunition to help you push the loan through quickly. So usually when we're looking at an application, we're going to give you an internal bank application, because what we do is we're going to look at the loan first, and we're going to go and we're going to get all the information, which is usually an application, a personal financial statement, your tax returns from your personal tax returns, business tax returns if you file a separate corporate return, business financial statements, along with your entity documents. And we're going to put together a package for approval and make sure that your loan, or make sure that your application makes sense and it cash flows, and make sure that it is a good application for the bank to approve. What a lot of people, I think, have a misunderstanding, or they just overlook, is the bank must approve the loan first before we engage the SBA. So once we have an approved package from you, then we engage the SBA for the guarantee. And when we engage the SBA, we want to make sure that we're prepared. We make sure that the loan is underwritten correctly. We make sure that all of our I's are dotted and T's are crossed when we're bringing a package to the SBA. Therefore, we can move the loan along quickly. So usually our turnaround time, we say around 45 to 60 days. For a traditional loan, we like it to be the same for an SBA loan as well. So that's why we ask that, engage us, you email us, you work with us, and ask us any questions that you have during the application process, so we can prepare you for the process of applying for the loan. So things to remember when you're looking at a loan and you're looking at applying, we discussed, make sure you know your purpose, make sure that you understand what you're asking for, have a clear understanding of the use of your proceeds. Make sure that you started preparing to get the loan by making sure that you're strengthening your personal credit. Personal credit always makes a business or commercial loan much stronger. So make sure that you're preparing your personal credit. Also make sure that if you have any experience in the industry that you're looking to take out the loan in, make sure that you're able to put that on paper. Business plan, resume, management resume, a professional summary of your business, some background on your business. We just want to make sure that you understand that that you are preparing for this process. So with that, I would kind of let Roger go into a little bit more about the eligibility rules around the process. And that's really just an overview of the application.
Thank you, Louis. One of the key things that I mentioned earlier on an SBA process, and this is up to the bank as well as the client to certify, is what they call the credit elsewhere rule. The credit elsewhere rule. And that means basically that the SBA wants to make sure that the funds for SBA loans get utilized by those that actually need it. And it's not really designed for people that could go down the street and borrow it from another financial institution along the same terms, or fairly easily, or if they have family members that have assets in the household that means they don't really need the SBA loan. And that's what the SBA is trying to determine, is just to make sure that the funds get out there to the small businesses that truly need it. So that's one thing I wanted to reemphasize, is that we have to, and it's, usually extended terms of 25 years on a real estate loan with no balloon, or maybe 10 years on a working capital type loan with no balloon. Usually that's not something you can get on an everyday basis down the street at another financial institution. without the enhancement of the SBA. And that, again, I come back to that enhancement. The SBA enhances the loans by things like that, the extended terms and allowing the lower down payment and so forth. So with that said, we'll come back to Lewis on common business types that we've seen for SBA loans.
Yeah, thanks, Roger. I think it's always beneficial. I always find it helpful for our audience or for prospective clients that we speak to know what type of businesses that actually we've seen benefit from the use of the SBA loans. I think this is it's not an all-inclusive list, but it is some of the more popular businesses we see with SBA loans that have made a difference, that has been beneficial to these businesses. Restaurants, child care, daycare centers, liquor stores, car washes, owner-occupied commercial businesses, funeral homes, professional offices, hotels, fitness centers, franchises, assisted living facilities and nursing homes, dry cleaners, farmers, trucking, and general contractors. So those are some of the key business types that we've seen that have been benefited greatly from the use of the SBA enhancement and the SBA loans. And like I said, if you're not quite sure where you fit or what type of loan you're looking at, that's a great opportunity to engage Roger and myself. Just shoot us an email and we can have a consult on what would be the best thing to benefit you. And like I said earlier, SBA focuses on small business loans, commercial loans, and there are many different types, many different industries, but some are not eligible for an SBA loan. So I like to hit that point so folks are just not wondering. There are some things that the SBA and some business types and business industries that the SBA just does not do. They fall out of their eligibility requirements. So nonprofits is one that we get a lot. They are not eligible for SBA loans. Lending and investment institutions. Another big one is real estate and rental businesses. Investment real estate, investment businesses. They are not eligible. We get that question quite a bit. Speculative ventures, government-owned businesses. What's another one? Loan packagers, and any religious-based business. That's another big one. We get that one a lot. So your faith-based organizations, your churches, your ministries, those are usually fall into that nonprofit category, and they are not eligible for SBA funding. So I will kind of turn it back over to Roger just to kind of wrap us up and give us a summary of what we spoke about and a summary of the process, and invite you guys just to reach out and engage us with any questions that you might have.
Thank you, Lewis. One more thing I'd like to mention on that ineligible business category, as Lewis said, we get that question a lot as far as investment properties, rental houses, things like that. That definitely does not qualify. But in order to finance a piece of real estate, commercial real estate, it would, in order to qualify for an SBA loan, it would have to be owner occupied. And owner occupied per the SBA means at least 51% is occupied of that property is occupied by your business. If it's that's regardless of the program, whether it's a 7A or a 504. And then if it's a ground up construction type deal, then it has to be 61% occupied by in order to be considered owner occupied. So I just wanted to point that out. The summary of the I won't take long for this, but the summary we wanted to show that it's really a simplified, streamlined process to apply for an SBA backed loan. And basically the procedure is that you contact us by the phone or come in and see us, and we would discuss the loan and determine, first of all, is it something we could do conventionally, or is it something we feel like strongly that needs the SBA support. Once we get that, then we'll very quickly send you a list of the information that we need. Lewis mentioned earlier, personal financial statements, tax returns, the information that we need to make a credit decision. And as soon as you can get that documentation back to us, then we'll underwrite the deal and make our initial credit decision. If we approve it, then we'll get together with the SBA. We'll engage our agent, which is what we call a packager, and the loan packager will work with us and will work with you to make sure that they get that package to the SBA to ensure your greatest chance of success to get approval. And that means, having a complete package, getting all the information to them, so we're not going back and forth with the SBA, and that creates a lot of delay in the time. And once the SBA underwrites it, if they give us an approval, they're going to communicate that to us. We're going to relay the answer to you. And then again, in conjunction with our packager, we're all going to work together to get those loan documents prepared and get the loan closed. So it's a really streamlined process in working with a small business loan on the SBA. It's not nearly as onerous as it used to be. And we're looking forward to working with you on those type loans. I do want to mention a few that were that we have been successful on recently. We do a number of SBA loans, a number of different types of loans. We recently closed a refinance, a 7A refinance on a large car wash, which was a really good opportunity to save that client some money because we were able to extend the terms. We've done a restaurant/bar leasehold improvements on that. That was a 7A loan as well. We've done an SBA Express line of credit for a doctor that needed some working capital because he was relocating his practice. So that was SBA Express is another 7A product. We've done an entertainment facility for a client that was a 504 project. It involved a lot of construction. So the point I'm making is that we have experience, in this type of lending, and we would love the opportunity to talk to you about your loan and about your opportunity. And all loans are different. So there's not a box, there's not a cookie cutter SBA small loan product. It's something that we would have to sit down with you and discuss, and we look forward to that opportunity. One thing I did want to mention in the product list that we had talked about, there's different areas. I think Lewis may have touched on it briefly, but the EIDL loan, or the Environmental Injury and Disaster Loan Program that the SBA has. If you remember, they had a special program, EIDL, we call it EIDL, had a special program during COVID, and that particular program has ended. But for years, the SBA has had the normal EIDL program that's still out there. Now, it's only for situations to where there has been a nationally declared disaster, such as a widespread tornado, a hurricane, or something like that. And I know a lot of you from the New Orleans area are familiar with that. So that product is still out there, and but that is a direct loan program where you would still go direct to the SBA. Okay, that's pretty much the end of our program. That concludes our presentation for Lewis. Do you have anything else to add?
No, not. Just invite everybody to utilize our contact information that I think they'll put up at the end of the presentation, just to reach out to us with any specific questions that you have. We're here and available to answer any questions, and look forward to working with you guys. So please reach out.
Thank you, Lewis. And we again appreciate your attendance and appreciate your time. I hope this information was helpful, but we really want to follow up with you. We're going to answer the questions that you have in the chat, or if you want to email after the fact, and we'd like to send those answers to the group, and that way everybody benefits from the answers and the questions that you ask. And we want to follow up with you and learn about your business, and we look forward to talking about your next opportunity. Thank you very much.